This is Mike Sullivan. I'm a former IRS agent. Thank you for watching my YouTube video. And today I want to talk to you about the trust fund penalty. I want to fill you in as much as you can why it's important. Now, the IRS goes after 941 payroll taxes hard because the reality is it's not a tax. It's money that employers have taken out of the checks of employees, and they're supposed to turn it over to the federal government. The IRS gives refunds to everyone who received a W-4 for that money being taken out and reported to the Internal Revenue Service. The problem is millions of businesses don't pay that 941. They run out of money and they use it for operating capital, and it happens. It snowballs quarter after quarter, quarter after quarter. And before you know it, you owe a lot of money to the IRS. So IRS wants to do two things. They want to try to collect it from the corporation to see if there's any assets that they can maybe seize or sell, or collect it on payment agreements. But there's many times they can't. So IRS imposed this thing called 6672. It's called a trust fund penalty assessment. It's really not a penalty. It's a transferee into some individual's name. So IRS does due diligence, and they look into who is responsible for withholding and paying to the government. Usually it's the owner, people who sign the checks, the people really in control of the company. So they look at this 941 and determine how much money that did the employer withhold from the person's check for withholding tax, and they determine how much was taken out for one half of the Social Security that what the employee put in. So what IRS does is they kind of give everybody a deal. What they do is they say to the responsible people, we are going to go collect only two things from you: the withholding tax and one half of the Social Security. The Social Security you were supposed to turn in. The other half of the Social Security, the match portion, the interest and penalties, and the 940s and any corporate tax, we're going to forgive. So what IRS actually wants is the money you have in trust. So when you figure out a trust fund recovery penalty, you need just to look at two things. What was the withholding that was taken out on the 941s, and what was the Social Security the employer took out? The rest is forgiven. So if you have problems, give me a call. Happy to do a longer explanation.